Good morning, Predicted Trades family. Hope everybody's doing well. Oh, what a nice rally we got yesterday. And, I know that we have been in a downtrend lately, and everyone likes to say stuff like, oh, it's a bear market rally, yada yada. While these things can be true, and I'm not saying they are wrong, I don't try to stick to the narrative that everyone else is sticking to. When everyone keeps talking about how bearish we are, I'm not always just shorting everything, you know? I'm always going into every day with an open mind and reading the system, right? We have a great system, we ought to use it. Let me, for a review real quick. Let's pop down to something like a 5-minute. So to review yesterday. There we go. ES opened running into our outer shaded region because it had gapped up. Sunday night we open futures, run into our sell zone, drop back down to our buy zone, then we get up to our sell zone, holding open and take off. I covered this in prep yesterday. We run into our outer shaded region, have a little dip to our purple hash line, the midpoint, before getting back to where we started. We bounce at that midpoint and keep on trucking past our outer shaded region up to the daily 8, the daily 8 and this key level at 3708. Overnight, we have continued the same kind of trend. We open, dip to our buy zone, pop up to our sell zone and held VWAP, and now we trek higher to our outer shaded region. Can we get more today? Well, we got more yesterday, right? So we can't get more today. We are up a decent amount, about 2/3 of an ATR. Yep. And let's just really quick, I want to look at SPY as well because that's what we traded together. Hopefully everybody can hear me, see my screen. But SPY provided opportunity galore off of our system. SPY opened at the top of this little 1-hour squeeze that was starting to form, dipped down to our buy zone, only barely slipped it, but then popped back up, bounces up to its open level, and even on a pullback sets a higher low and hits our buy zone again. This is where we got in long because we let it prove itself and caught the pullback. It's a small risk because we get in here near the low and we're basically risking against rolling over for a new low. We got in the 363 calls for 75 cents. By the end of the day, those were $5. We pop on up to our outer shaded region in that purple hash line where we consolidate for a good amount of time, few hours, midday. If you checked out the little training manual that I posted, the little, like 20-page PowerPoint that I posted the other day, this was one of the scenarios described where we can dip and rip, and then we can consolidate sideways, not heading back down for an afternoon kind of dip and rip. Just wanted to show that on spikes. That's what we hit. We can see that now we are going to be a little higher, but because of the way the tool works on SPY today, it's going to plot the same grid at open. So we will know where they might dip it to. Could be the buy zone today or the purple hash line, and we won't know those levels until we have our opening print. But I wouldn't be surprised to see some of them overlapping these key levels. Like our buy zone today will likely be down near this 370. We can get continuation today. Another point that I made in the channel this morning, I used this little chart that I like to keep over in my menu as a guide for change of trend. What you're looking at is a set of different MAs, kind of all stacked together. I'm sorry, not all stacked together, but cascading in kind of a ladder. What this is moving averages from the 15-minute up to the 4-hour. I like to teach in here that the 45 EMA is my line in the sand for a change of trend. So each one of these lines represents a 45 MA from different timelines, or time frames and timelines. So yesterday, pre-market, we got up above our 15-minute down here and 30-minute MAs. When we got open in the cash session, we dipped just enough to tag both of those and bounce. That's a very bullish sign, meaning that we can bounce from here to try to take out each moving average from each time frame. And that's what we got. We bounced at that 15 and 30. We fight up through the 1 hour to the 2 hour. We consolidate for a second at this trend line from the last couple of days' highs. Trend line is about where we consolidate for a little while, and then we push higher, ultimately making it to the 4 hour. And I'm sorry, I just realized this was in queue when we hadn't got to the 4 hour, because yesterday we did arrive at the 4 hour. So let me switch that real quick. And let me go ahead and put this back on yes. There we go. So yesterday we fought up above the 2 hour, held and consolidated at the daily 8, and then pushed higher to the 4 hour, which is that cyan moving average. If we back up to look, all of last week, here we go, there's Monday, and if we look, that moving average was way above the 4 hour, that is. And all of last week, we stayed underneath the 4 hour 45. We didn't actually even get to it. On Wednesday, we got close, but we ran into a 4 hour squeeze. See how that works? 4 hour MA, 4 hour squeeze. This is where some key setups can take place. And as they love to do, they had the sell-off into Friday, making it so that 4 hour started to fire coming into the week, and then they reversed the ship and right back up. We have now cleared last week's high pre-market, and we're kind of consolidating at it. So we can continue higher, and talking about these moving averages, now that we're above them, we need to hold them for continuation. Our 15 and our 30 have now caught up overnight above the 4 hour, with that 30-minute and 4 hour pretty much sitting at 37.08. So we could have a dip to retest that 37.08, which lines up well with yesterday's highs. Ultimately, as long as we can stay above this 37.08 today, we are looking very good for continuation. So if we have a dip here, I'll be taking a shot to go further long. Now we could lose that 37.08. Oh, start freezing on me. There we go. We could lose that 37.08 and come down enough to tag our 1 hours and 2 hour MAs that are crossing at about that 36.80. But ultimately, for us to just, have a quick dip and then keep on ripping, that 37.08 is pretty key. We have fought up to this 37.41, and I don't know why I'm still talking to the small chart, because now I'm going to start talking about above the MAs, but let me switch this back up to our normal time frame. All right, good to see some folks are logged in or tuned in and listening. So, for today, we don't have any squeezes. We have fired everything after such a strong push, and after such a strong drop and then push, we've kind of obliterated all intraday squeezes, which is fine because we have our levels to work off of. Before we talk about where we can go higher or lower, let's take a quick look at our economic calendar. Today we just have some job data coming out around 10 a.m. and core capital good, order revision, and then some Fed speakers. Tomorrow we have ADP employment report. That'll kind of be a big one, and international trade balance. So we could see some interesting movements tomorrow pre-market based on when after this data drops. On Thursday we have our normal initial jobless claims, Fed speakers, a lot this week, pretty much every day. And then Friday, the big one is non-farm payroll and unemployment rate. We also have our inventory revisions, Fed speakers, consumer credit. But non-farm payroll and unemployment are going to be the big one. The theme this week is, what does employment look like? We have ADP report, we have our weekly jobless claims, we have non-farm payroll and unemployment rates, and average hourly earnings, right? So it's all about jobs this week. We got all of our inflation data, right, last week with PCE. That's why we sold a little further. August was a little worse than expected, but not by a lot. So the next metric is, what do jobs look like if people are still gainfully employed and unemployment is coming down and more people are employed, then there will be more and more spending, more and more investing. What we're all looking at as far as inflation. Inflation can start to come down as unemployment gets lower and lower and more people are employed. So that's the schedule for jobs this week. Next week, it's going to be a big one. FOMC, CPI, some retail sales. And next week, we are going to start getting closer to big tech earnings. Micron already reported. They're not on my list, but they reported last Thursday. They kind of kick off earnings, in my opinion, where they're the first chip maker, the first tech name to start reporting earnings. And they had decent earnings, and we started to see some rotation into chips again. The next big earnings, Netflix, is going to be on the 18th. Which, not next week, but it is the following Tuesday. So we could start to see over the next 2 weeks a little bit of a ramp into earnings. But before I get ahead of myself, let's get back to ES and we'll walk through all the names. Let me take off the Beast tool for today so that we're not over cluttered. So For today, like I stated, want to stay above this 3708. We also have the daily 8 sitting there, creating a zone of support. So if we do have a little dip, would like to see 3741 hold now that we're above it. But if that starts to give out, it could be a dip down to this 3715, 3708 zone to find support. They might want to take profit off the gap up and bring it back near yesterday's highs in this support level to catch a bounce and continue. We could also just hold 3741 and continue. To the upside, we've got 3773 where the daily 15 is now caught up to, and we have 3807 right past that psych level of 3800 with the daily 21 sitting right at 3816. 1585, but they are moving. So let's see if we can hold these one of these two key levels and continue the journey for a full reversion to the mean. I wouldn't expect too much past that today, just because we are about 2/3 of an ATR, and even getting there is going a little bit past an ATR. We do have some key levels past that, but overall, if we can continue the push, maybe after a dip today, looking to get to the daily 21, big key level. If we start to lose this 3708, 3700, then we're likely coming right back to 3668 and the last bounce point from yesterday at 59. So 3660 to 3668 is the next zone that will go down to retest. Overall, a ton of volume stepped in yesterday, and we had a good solid push with very, very little pullback. So let's see if we can get that continuation. And also, before I move on from ES, change of trend is getting through the 45 in my mind and holding it on pullbacks. So that's why I say I want to see that 3708 hold today on a pullback. If not, we're going back below the 4-hour and we could be back in downward continuation. Just because we get above, we can start to lose it again, and this be a fake out to trap the bulls, right? But our 4-hour, we are now above it. It is starting to curl up and guide up, and as long as we can hold it on pullbacks, the trend can continue, right? Let's go on to NQ. NQ fought back above the daily 8 and back to this 11,500 psych level. If we take a dip, just like on ES, I would like to see this daily 8 and this first Keltner to the downside to hold up as support. You could call it that overnight high as well in there. Would allow it to dip enough to test yesterday's open, maybe fill the gap, but overall I want to see it stay above. I'd like to see us stay above this 11,400 on a dip, but if we do reach down to 300, I'm okay with that. Anything past that, I don't like it. And I'll just link this for right now so we can kind of check it on each. To the upside, let's see if we can hold this 500, this 400. Looking to get up to 600 where the daily 15 sits, and then the daily 21 sits up at, about 11,750. We could also, since we arrived to the daily 8 and 15, we could consolidate in here for a day before making the push to the 21. Where's that 45? Yeah, that 45 on the 4-hour is right about 370, so right underneath that 400. So really would like to see that hold if we do have a dip. As long as we can hold there, that 370 to 400 kind of also aligns with Friday's high. As long as we can hold there, we can continue this trek higher. If we start to break that down, then we are going to likely come back to 200 for a test where we consolidated yesterday, and then past that, we've got our key levels here. There we go. Ready. Boy, oh boy. Hopefully you guys saw that key level before the clouds dropped in. How we held it all during every cash session last week. Even in the sell-off on Friday, only making a dip below in the after hours pre-market, making a very strong shoulder with this head down here, and now, or inverse head and shoulder, right? And now we're heading back up. The Ready was the first index yesterday to get to the daily 8 and keep trucking, which kind of lended to the rest of the indices doing the same. I try to talk about how the Ready, since it's comprised of 2,000 small caps, right? Sometimes we can see it react first. Sometimes we see it dive first when it tends to be a down day and the other indices kind of catch up. Yesterday it was very strong, ripped right up to the daily 8 and kept going. Now the first one already to the daily 15. So we could start to infer that each other index would like to get to the daily 15, especially if the Ready just keeps on pumping up to the daily 21. So going to keep an eye on it as a gauge. On a pullback, want to see it hold above that 1713. Which is also kind of the daily 8. That's where that 4-hour 45 also sits. So want to see us hold the daily 8 if we do take a dip, which is very close to yesterday's highs today. And we could also just hold around this 15, maybe a dip to VWAP, and keep on trucking. We also have a last week's high at that 1730. So we could have a quick dip to 1730, also that overnight high, and continue that journey up to 1760. Let's see, we still have about 20 points in the tank. We can absolutely get to the 21 on the Ready today. If it starts to give out that 30 and then 15 back to 1700, and that bounce point from the midday top of this zone right at 1700. YM. And if you find these preps helpful, would definitely appreciate a like or a comment. Try to put in the effort every day to give everyone a good roadmap. On YM, nice strong day yesterday, getting back to the daily 8. Now almost to the daily 15, and look at what we're knocking on the door of. Psych level 30,000, already tapped at pre-market, having a little pullback. Today, definitely want to see us stay above this 29,650, 675, where the daily 8 sits if we do have a little dip. Also aligns near yesterday's highs at 715. We also have last week's high that we are pretty much at. So it could just be a quick dip to something like, say, 750 and then keep going. But ultimately looking for this 650, 675 to be enough support if we do have a stronger dip to reverse us right back up and continue to the daily 15 and daily 21. Looks like it's 400 points higher. It'd be past an ATR today to get to the 21. but we did have a stronger than ATR day yesterday. What do I think we had like 700 or 800 points. YM technically open kind of near 850 and made it to 6. So yeah, it was about 800 points from where it opened. We could get it again today and make it to that daily 21. If we start to give out, then coming back to this 315, it was very big all week. Support, resistance, resistance. Yesterday, midday support. So if we lose this 650, 675, we could come back down to this psych level of 2950, or sorry, 29,500, the overnight low, and then back to this 315. Apple. So Apple cash session arrived at our zone. We did have the overnight and pre-market dip lower, but ultimately opened same spot as it closed, at the bottom of our zone. And very quickly, Apple showed that it was going to be strong yesterday. It was one of the first in tech to pop up to our sell zone and push through it, moving off of this key zone at 138, 138.8. That, to me, was a big key sign to go long on the day, and Apple could engulf, and that's exactly what we got. Now she's gapping up to the next key level, midway between my lower zone, not midway, but you know what I mean, the key level in the middle between my lower zone and my next zones above. So, looking for us to hold 144 today. If we lose that, I'm going to come back to fill the gap at about 142 and a half, 143. Looking for that to hold if we do have a dip. But if we can also just hold 144, the goal is to get up to the daily 8 and first Keltner, which sit near 146, and then back to our key levels above 147 and a half, 149, 150. The daily 21 has caught up almost to that 150. In fact, the 15 and 21 are likely going to step down and be flanking 150, one below and one above. So ultimately, that's the target to get back to. Also, last week's highs. I'm sorry, actually, obviously we had higher highs yesterday, or last week, but once we got under 150 on Wednesday, it was a huge resistance level. And that was after that news that they were slowing production or whatever. So, let's see if Apple can hold up, keep chucking higher. If it starts to give out 142 and a half, 143, then we could be coming back to our midday bounce point near 140 into this zone. AMD. AMD reports near the end of this month. Made a nice bounce yesterday off that third Keltner. Looks like it tagged it during the cash session and fought up to the second Keltner, so making a full ATR move. Now a little higher and above the daily 8, looking for that Keltner and daily 8 to hold around 67, 67 and a half. If it starts to give that out, we could come back to fill the gap near 66. But if we can catch bounces there or just keep going at open. First looking to get back to 70 psych level, where that first Keltner, the downside, sits. Daily 15 around 71, and the daily 21 is up near 73 and a half, sorry. If we start to give out that 66, then likely coming back to 65, 64. Amazon reports end of the month as well. If you're wondering the monthly schedule, we do have an earnings channel in our Discord where we drop in stuff from Earning Whispers. Here we are in October. They didn't post the monthly calendar yet. Usually they'll, at the beginning of the month, Earning Whisper will tweet out the monthly calendar, but it looks like they didn't just yet. And we don't have much this week. But we'll start looking at the earnings schedule as the month progresses. Amazon, nice and strong yesterday, off that 113, right on up to the daily 8 at 116. And now, capping up nice and strong and tapping the daily 15 already. Daily 21 sits at about 121. So that's the first target to the upside. And then the next big level would be 125, where we sold off from. If we have a dip, looking for yesterday's highs to hold around this 116. Sorry about that. Heard some noise outside right next to my car, so I wanted to go check. If we have a dip, looking for that 116, that daily 8 to hold and send us higher. We could have a consolidation day where we tap the daily 15 and slip back to the 8 and consolidate before heading higher, and we can just keep on trucking and get that full reversion to the mean. If we give out the daily 8, then, we're coming back to the same levels we've been playing all last week. But definitely strong and above our 4 hour, right? We arrived to the 4 hour 45 yesterday and tapped it. That was my target on most things yesterday. So glad to see we got it. Now we're gapping past it. Need to see it hold as it still sits right back at yesterday's highs. So, VA. Same move as everything else we're probably about to look at, from that third Keltner up to the second, starting to arrive at the daily 8, so that's the first target. And then past that, that first Keltner down at 133, and our 15 and 21 are still way above because BA got sold off pretty hard. I mean, it rode the third Keltner down. BA is still not above its 4 hour 45, which sits at 131, which is just past the daily 8. So I'd like to see BA get up to that 131 where the 4 hour sits, hold above the daily 8 on any pullbacks, and try to keep on trucking. If we pull back and start to lose 127 and a half, 127, and it's starting to look like we could reverse back down, same levels that we've been playing. Cat. Talked about this in prep yesterday, how Cat in Friday's sell-off got nowhere near the lows, so it was a good candidate of relative strength in case we push yesterday, and that proved to be true. Cat pushed from the middle of this range where it opened, pushed on up through last week's highs, and made it back to the daily 8 and the daily 15 at the highs, and now gapping up to the daily 21. So Cat is already pretty much reverted to the mean. For the rest of this week, looking for Cat to, continuation of the upside, looking for Cat to hold this daily 15 and daily 21 now that it's arrived to it and gapping, looking to hold that daily 15 and 21 to try to make the journey back up to first Keltner at 180 and the daily 50 at 184. If we start to lose that 172, 171, we could roll back to this daily 8 at 168. Coin. A decent day yesterday, although it kind of was a lagger. It had a very strong day on Friday while the market sold off, making it back to the daily 8. Then it rejected pretty hard yesterday, but stopped at that first Keltner to the downside near the bottom of some squeezes and reversed right back up to the top of this 4 hour through the daily 8 to the daily 15 and 21, which were overlapping. Now we're gapping above that. Would love to see us stay above 68, where that daily 15 and 21 sit, but we still have this 4 hour squeeze we're dealing with, so we could see a little dip. Ultimately, would love to see 65 and a half, 66 hold where that daily 8 sits. You know, just like we can't arrive to some means, come back and hit this mean, setting a higher low from yesterday at that first Keltner down. So ultimately looking for this daily 8 to hold if we have a dip, and to keep trucking up to that daily 50 MA at 73 and that first Keltner at 74. Google A. Decent move yesterday as well. Opened above that second Keltner, made it to the first Keltner, gapping above it now. Would love to see if we have a dip. This 98.5, 99 hold. We are above 100 pre-market, so let's see if being back above 100 just wakes up more buyers. We're at the daily 15 here, and looking to get past to the daily 21, sitting above. Yeah, our first Keltner's up near that 105. If we can't hold that 98.5, could be coming back to test 97.5, last bounce point from yesterday. But come on, XLC, let's be strong. You've been so weak lately. GS. Banks, you know, not really impressive. Stayed in the same range as the previous week, but starting to gap up a little bit. What are we at? 303, 304. So we're gapping up over this daily 8, which sits at yesterday's highs. Want to see that hold and keep pushing past 305 to fire these squeezes to the upside, with the goal of getting back to the daily 21, up at that 313, the daily 15 up at 311, 312. JPM, probably going to be the same. If I'm going to play finance, it's going to be GS. It's 3 times the ATR of JPM. But, you know, JPM makes good moves. Over the daily 8, looking for that to hold on a pullback, and looking to truck up to the daily 21, daily 50 at about 111.5, 115. And real quick, I want to see when their earnings are. 10/18, so the same week as Netflix. GS reports, and JPM might even be next week. Yeah, next Friday JPM reports. So we've got some banks starting up next week and into the following, and then big tech at the end of the month. Meta. Yeah, earnings end of the month. Earnings season. Do we all remember what happened last earnings season? If so, let me know in the YouTube chat. Meta, you know, made a nice move yesterday, but also last week's range. Now gapping up to the top of it. Let's see if it can hold above the daily 8 at yesterday's highs. This cycle level of 140. Trying to push up through pre-market and last week's highs at around 142. We've got that daily 15 around 143 and the daily 21 up at 146. If we start to lose 138.5 pre-market low, or overnight low, sorry, we could come back to 136 for a test, last bounce point from yesterday. Microsoft reports end of the month. Who held that big key level. Made a great move yesterday. Back over the daily 8, back above 240, 241. Now, gapping up almost to 245, almost to the daily 21, having a little pullback. Let's see if right about there, 244 can hold this high from last 2 Thursdays ago, sorry. Let's see if that 244 can hold on a dip and try to send us up to 246 to complete the journey to the daily 21. Past that, psych level 250. If we start to lose 244, coming back to fill the gap to 241, 240. Looking for 240, 241 to hold. That was where we would arrive to last week and reject. Arrive to and reject. Yada yada. So now that we're above it, looking for 240, 241 to hold, and Microsoft to finish this journey up to the daily 21. Looks like the daily 50 is still way, way, way above. Yeah. So if we clear the daily 21, we'll be talking about 250 and the first Keltner. If we start to give out that 240, 241, we could come back to 236, kind of that last bounce point from the midday of yesterday. Netflix. Oof. Netflix, had that big day Wednesday and then stayed above its daily moving averages. Yesterday, it went back to the daily 21, this white line, to catch a bounce and right on back up to these recent highs. Ultimately, on a dip, looking to stay above 240. And to continue to last week's highs near 245, psych level 250. And our daily and 2-day squeezes are slowly starting to open up. We've got that first Keltner at 256, second Keltner to the upside at 256. But 250, recent high we sold off from, will be a struggle. We start to lose 240, coming back to the daily moving averages. Wouldn't be surprised if Netflix did that and took a little break, while other names caught up to the daily 21 and above it, and then they all moved together. NVIDIA. Hopefully the first thing you notice was the range we were stuck in. And yesterday we fought to the top, and now we're gapping out of it. On a dip, looking to hold the top of that range at about 126, 125. And to try to continue the journey up through psych level 130 and up to the daily 21, which sits at about 133.5, 133. If we start to give out that 126, 125, we could come back to test where we bounced yesterday around 122. Oh, come on, Toss. Don't you freeze on me. There we go. Wakey, wakey. QQQ. And just another reason I track those daily Keltners in my intraday levels. We fought up 2, held that daily Keltner, and kept on trucking almost to the daily 8, now gapping above it and to this key level of 280. If we have a dip, looking for that daily 8 to hold around 276. If we start to give out that 276, coming back to retest this where we closed, fill the gap at about 273.5. But if we can just keep trucking, Looking for QQQ to continue up to 280. 282 where the daily 15 sits, and 285.5, let's call it, where the daily 21 sits. Oh, I'm not interested in Roku, SPX. Ooh, wait, let's check in on snow, because that was one setup I talked about yesterday. Snow, snow, snow. Made it from the top of the squeeze down to the bottom. Ooh, even reached pretty far down. Almost filling the gap from earnings. Hoo. And then we got a nice reversal from 161 back to 174 yesterday. Whew, I am sad I missed that. Now gapping up, renting up at 177, above the daily 21. This could be the beginning of breaking out of this range and getting back to recent highs, back to that big level of 200 where the daily 200 sits at the top of this 2-day squeeze and daily squeeze. So I talked about this yesterday. This could be a great candidate for long side if the market can catch a bounce. Obviously, we saw the market take off yesterday, but snow gave us an opportunity. It pulled way back, set that new low, just like the rest of the market did, and then it played catch up, right back up to highs, to the daily 21. Well, let's see if it can continue a strong drive up to the daily 200. Looks like they don't report earnings anytime soon. Let's move to SPX. SPX made it back to the daily 8 and to this gap fill, and now we're going to be gapping above it. Let's see, we closed at 78, currently gapping up, say 50 points. Gonna be up near 30, so we'll be above this gap fill. So let's see if on a dip we can hold the top of this gap fill. If not, we could come to fill this gap and fill our current gap up just enough and then take off again. Ultimately, 37.71 and 38.07 were that daily 15, daily 8. Sorry, daily 15, daily 21 sit. Love that 21 right near that 3800. Let's see if we can get there today. If we do come back and we can't catch a bounce here, we're going to come back and fill the gap, be at that daily 8 again at the bottom of that gap. Should that give out back to 36.45. SPY took out our 362, 365, kept on trucking yesterday. Now above our 371 and technically in a gap fill. We had this where we closed around 274 and then opened down at 374 and then opened down at 370. So we are pre-market fighting into this gap. Let's see if before open we slip right back down and open just below it so that we could just hold 370 and start this gap higher, or start to fill this gap back to 374. These little wicks always give me a little pause because it could mean we're going to have a little bit more of a significant dip, maybe a morning down, just to get back to hit yesterday's highs, or fill the gap, or hit a key level. We can see that this wick is exactly filling the gap, and then right below that is the key level. yesterday on the drive up, we nailed this 365.45. That was the high of day as we sat in this pullback and consolidated. But we never tested VWAP. We stayed strong. We loaded for more longs. And one point I should make, we hit those midday longs picking up the 364s as it was at 364 that went like $1 to 4. That was also a good point to pick up Wednesday's calls, which were likely having a pullback to beast, depending on what you're looking at, maybe the 375s, 370s. So something to note. Let's see if we can hold up near this 370, 369. Catch a bounce and keep going to fill this gap. If we start to give out that 369, we could come quickly back. We do have yesterday's highs that we could bounce, but if not, then back to fill the gap in this 36.45. Below that, 365.45. Below that, 362. Tesla. Tesla was quite the lagger yesterday. And still a bit of a lagger. It is gapping up. And right around that 250. You know, overall, not loving Tesla. And not necessarily going to sit here waiting for a catch-up when it doesn't want to catch up. We've got a lot of news looming. One tidbit I saw yesterday at one point was out of the whole S&P, there was only like 6 names in the red. Tesla and Twitter were the top 2. So we could very easily infer that Tesla and Twitter have their legal issue going on, have this acquisition going on, and they're not loving those 2 names when the market tries to go up. So might just give Tesla a break, let it find its feet and start to look promising. That is my advice. There's plenty of other things going on in the market, plenty of other names providing opportunity. No reason to pick up Tesla at the bottom and it barely move, barely gap up. We could probably guess that if we do have any decent pullback at open, Tesla's probably going to go right back to yesterday's lows. So I know some of us in the room talked about picking up Tesla yesterday, but after this lackluster bounce and closing right near the lows, you know, just not loving it. And it's only up a few bucks. So oh yeah, good point, Star. There are some great gaps on Tesla to deal with. You know, maybe when it starts to break into this gap, I'll take a little bit more interest. I'm not trying to say, you know, it isn't going to pop right back. It could. Just noting, on a very strong day in the market, I'm not, you know, not loving what Tesla's doing, so I'm not going to give it a ton of energy. UVXY. I'm sorry, I'll go back because I may not have really covered where can Tesla go today, and I don't want to leave you guys hanging. Tesla's at least void of any squeezes. We do have this 2-day squeeze up above at 254. So right now, I want to see Tesla get back above this 2-day squeeze, back above this second Keltner, also at 254.5, and start making the journey back to the daily 8 at 270, where that first Keltner first Keltner down also sits. If it keeps rejecting the second Keltner, that 254, and this 2-day squeeze bottom, we could roll right back to fill the gap and retest 240. We are at third Keltner at that 240, past that 235. But let's see if we can hold the gap, or at least fill the gap and catch a bounce. Once we start getting back above 250, gonna like it more to return to that 255 and then up to 270. I know that that's a jump. I could just say 260, 265, 270, but I'm working our system, right? This is the first target. If we can turn that into support, then it's a push up to the next target. Daily 21 still sits up at 280, kind of back near last week's highs. UVXY. But thank you, Star. Appreciate your input always on Tesla. UVXY made it down to the bottom of this 4-hour squeeze. Now it's getting down to the daily 21. Talked about this yesterday. If we're going to see upside in the market, I'd love to see UVXY continue this downtrend, fall out of this wedge, and make it back to the 21. And now we're getting that as the market and everything else is getting closer to its 21. For further upside this week, I want to see UVXY get below the daily 21 at about 11.25. You know, it could bounce at 11 and come back to test, but want to see it reject, roll over, take out 11, and make it down to this daily 50 at 10.5. We could see it hold the daily 21 and start to bounce back to fill the gap. The market would do the same to the downside. And if the market were to continue back down, we'd see UVXY get back to 12 and 12.5 to test this trend line from the highs. And, you know, retest this wedge. But I love the wedge break, the slip back to the mean. Let's see if it can slip on further. VIX, and then we are done. VIX is a big one. Want to talk about this. Yesterday on VIX, I talked about for upside in the market, wanted to see us stay below this trend line since we were arriving below it pre-market. We reached outside it just a little, but then right back down. We also rejected this first Keltner. And I talked about for upside in the market, want to see VIX slip back down to this daily 8, into these squeeze bottoms, and to make the journey down to the daily 21 at about 28.5. VIX did make a nice move down. And yesterday, for a long time, it held 30 and bounced. And then slipped 30 and got back above it. We've seen headlines recently about how some folks are getting in trouble for manipulating VIX. Well, it's a broad problem across the market where they love to manipulate VIX. Let it drop to 30 and hold it there while we're grinding higher. In fact, even in some of this bounce, we were still grinding higher. We had a little bit of a pullback and consolidation, but we took off much higher, and VIX just slipped a little and then came right back to 30. So you can bet they are manipulating here to try and trap people to going back short if we are going to continue higher. Yesterday, I took one shot on puts that only worked for a second, and then when it started to give out, I just gave up. And I said, they are loving it today to the upside. I don't need to touch puts anymore, and I kept nailing calls. You know, we can see those pullbacks that change the intraday trend. I took a shot, but it never really gave out, and we bounced right back up, so I cut it and get into calls. Or really, it was adding to my calls. So, for today, on VIX, for continued upside on the market, I want to see VIX get back below 29, 28.8, make its way down to 28.5 and 28, where that daily 21 sits and that key level of 28. We are still in the bottom, near the bottom of this big 4-hour squeeze, and to get it to fire, we have to keep pushing into it and close in it. Then it will open up to the downside. If we're going to see a little pullback, it could be tagging 29 or taking off from this 29.2 and coming back to 30 where the daily 8 sits, and maybe even this trend line at 30.5. That would cause the dip in the market that I've described. If we start breaking past this trend line, then the market's probably filled the gap and then going further back down. But love to see VIX continue this trend down. Ooh, yeah, let's check in on those MAs on VIX just for fun. Right, about 29.8 is the 4 hour. And then look at those 1 hours and 2 hours sitting right at that trend line. Like, how beautiful. I love it when things line up. And a lot of times we can get indicators, key levels, trend lines to line up for confluence, right? So if we do have a dip, VIX will likely come up to hit all these moving averages, which is fine by me. As long as we reject and come back down, we can see great continuation. If we start to break through this and hold, right, not a peek through and reject, but a breakthrough and holding on a pullback, then we'll see a rollover. Then I'll be looking at puts again, right? And, you know, I always teach to watch calls and puts. I might take a put if we do have a dip at open. But overall, I'm understanding that we are showing the signs to change trend. We got above those 4 hour 45s on most things. VIX is getting below its 4 hour 45. So let's see if VIX can continue down to 28 and the daily 21 so we can see the market get to the daily 21. Or if VIX is going to come back, take out the daily 8 and head higher, and we're going to reject back down. Thank you for tuning in. Hopefully this is helpful for everyone. Sorry if it was a little long-winded. Just wanted to cover everything. When we talk about new month, change of trend, we have earnings coming up. You know, everyone's screaming that we're going down is when they love to give us a pop. And there might be good cause and good reason to base and head back up. One thing I may have mentioned yesterday, or either way, another key point is we made it back to low of year, and yes, we set new lows, but we have bounced very hard. Sometimes a double bottom is not as clean as tagging the exact level and taking back off. Sometimes a double bottom is getting down to that level, messing around, slipping it a little, slipping it again, showing new lows before you take back off so they can trap a bunch of shorts, right? Cutthroat game out here. So thanks for tuning in, guys. Hopefully this is helpful. We'll see everybody in chat today. All the Beast tools have already been posted. Happy hunting. Good luck.